Hi, this is kbunschoten, the president of Certum Solutions, an accounting consultancy located in North Carolina outside of Charlotte. I wanted to talk today about something called Constructive Receipt and how it pertains to your software and your bookkeeping. Before I get started, if this is the kind of content that is helpful to you, please voice your opinion by subscribing to our channel and hitting your like buttons. I'm not going to lie, I've got an app on my phone and I will watch the likes come in. So when I see a lot of them, I'm like, yes, that's what they like to hear. And if I don't see a lot, I'm like, well, I'm not doing that again. So voice your opinion. Let me know in a productive way. Do you like this content and should I do more of this? Okay. So going back to the original topic at hand, constructive receipt. A lot of clients will call towards the end of the year and ask, how do I time my gross receipts? Okay. And as a quick caveat, you do have other things that that constructive receipt applies to, like dividends, but we're not going to talk about that today. We're going to keep it easy and simple and talk about, like, say, checks received from customers. Okay. When do I time these deposits to make sure that it's reflecting correctly on my taxes? Okay. Constructive receipt is a way of treating your income where it says once you receive money, and this only pertains to cash-based companies. If you're accrual-based, you're already reflecting that income as it was earned, according to GAAP and timing. Okay. But for cash-based companies, when do I reflect this income? Constructive receipt dictates that when you have use of that money, and when you can use that money, and there's no restrictions to the funds, how they can be used, that's when you reflect that income. So the easiest example I can talk to you about would be like receiving a check, okay? And this is where it gets tricky when you use accounting software. Accounting software traditionally, as they're moving towards automation, they are using things like bank rules to bring in your transactions and reflect that on your P&L. If you still receive paper checks, as a lot of us do, I would say personally, like 80% of my stuff is electronic. Then you also have that 20% where it is still paper, okay? Those paper checks, if you receive them and you're maybe out on vacation and stuff like that, you've not deposited them in the bank, they're sitting on your desk. You may go, well, I'll just deposit that in January. According to constructive receipt, that check has been received by you in December and does need to be recorded in the December fiscal period. Okay. And I'm using December, just assuming most of us use the calendar year fiscal, but if you use a different fiscal year, obviously you can kind of take this and extrapolate what you need to. So, you receive this check. The proper way to account for that income received, according to constructive receipt, if you are a cash-based business, would be to record a manual deposit in your books and to put it to undeposited funds. Okay. Undeposited funds is like those old lock boxes or the old, zip 'em ups where you keep those checks in there and somebody drops it off at the lock box at the end of the day. It's kind of a virtual version of that. But as you can see with a paper check, since it's not actually hit your bank account yet, it's not going to be reported as income according to bank rules and automation. So especially at the end of a fiscal period when you're getting ready to report taxes and things like that, maybe do board reports or prepare for your board meetings, other stakeholders in the company, you want to make sure that you're reflecting everything accurately. So you'll make your deposit, make it to undeposited funds. I have some screenshots in the blog post that I'm putting in the description. And then once you make that deposit, then you'll reflect that deposit accordingly, bringing those things over from undeposited funds. And for this video, we're talking about QuickBooks Online because that's what we work the most with, but it can pertain to any other accounting software that you use. What this does is it reflects the payment received as a cash-based business, but it also shows that it's not hit the bank account yet, because if you get more checks and you deposit all those checks in a batch, that way, when you do that deposit from undeposited funds, it's going to bundle everything together and put it in your bank account at the same time and make your bank recs a little bit easier. But just to turn back around, again, just to go through constructive receipt. Constructive receipt is when I have deposits and income received and I am a cash-based business, I reflect that money once I have control of those funds and it is unencumbered or restricted. Okay. Again, so if you have paper checks, make sure you deposit those in your books and record them in the appropriate period. And then if you have questions about it, and it's kind of a funky thing. A lot of people don't hear this term very often. If you want to know how you reflect it accurately, or you'd like to talk to us about our bookkeeping services, make sure you schedule a meeting with us using our Calendly. Give us a call at 980-210-6946 or shoot us an email. Thank you so much. I'll put our contact info back down in the description. And I can't wait to talk to you again about another super interesting accounting topic. Thank you so much. Talk to you soon. Bye.